What do you want this place to be?
I want it to be number one. Not in the region, but in the world.
Hi everybody, the real estate market of Dubai is considered to be a gold mine investment by celebrities, actors and CEOs all across the world.
Dubai's real estate market is thriving.
It has become the world capital of luxury housing.
You buy, there's no tax. They just have so much money, they're like,
It continues to see record high prices.
Dubai's property market is defying the trend.
Record-breaking highest rate per square foot.
They've been selling property. They have record numbers of sales.
Buyers are paying anything from 10 to hundreds of millions of dollars, breaking sales records month on month.
The city is now a global business hub and luxury tourist destination.
And the Dubai market rates are growing so fast that if you have 1 crore to invest, you can buy a property in Mumbai, Delhi or Dubai. But fast forward to 10 years later, where do you think your money will grow the most? Look at this. While in Mumbai, it could stand at 1.5 crores at an annual growth of 4.5%, in Delhi, it would appreciate to 1.4 crores, whereas in Dubai, it would shoot up to 2 to 2.5 crore rupees. Now, let's talk rental income because this is even more interesting. If you buy a flat in these 3 cities for 1 crore rupees, while in Mumbai, you will get a rent of 30 to 40,000 rupees per month. In Delhi, it would be 25 to 35,000 rupees per month. Whereas in Dubai, you will get rents between 70,000 to 1.2 lakh rupees per month. And here's the best part. While Mumbai and Delhi will tax your rental income at anywhere between 20 to 30%, in Dubai, you keep 100% of your profits. Zero tax on rental income, zero tax on capital gains, and zero property tax. And if you talk to any agent in Dubai, he will tell you that this is the reason why India's richest people, from Shah Rukh Khan to Virat Kohli, from Mukesh Ambani to Gautam Adani, all of them are pouring money to buy properties in Dubai.
Mukesh Ambani, Asia's richest person, spent a combined $238 million on 2 villas on Palm Jumeirah.
Dubai is emerging as a favorite market for the ultra-rich British footballer David Beckham with his wife Victoria, and Bollywood megastar Shah Rukh Khan will be some of Ambani's new neighbors.
And they will also tell you that if you compare this to Mumbai or Delhi, in Mumbai, while you will struggle to find a 2 BHK for under 2 crore rupees in a half decent location, in Delhi, even after spending crores, you will end up in a congested colony with traffic jams and power cuts. But in Dubai, for the same price, you will get a luxury apartment with world-class infrastructure, high-speed roads, no pollution, and most importantly, no property tax. Sounds insane, right? But you know what they don't tell you? They don't tell you that Dubai also has some hidden pitfalls. It has tax traps, oversupply risks, and the biggest danger of all is that the economy of Dubai will crash if recession hits the United States of America. So in this episode today, we will do a deep dive to try and understand, is Dubai's real estate really booming or is it a bubble waiting to crash? Why are celebrities, billionaires and actors so crazy about owning a house in Dubai? And most importantly, what are the hidden traps for an Indian in the real estate market of Dubai? Before we move on, let me introduce our partners of today's episode, which is Liquid Black. People managing money can be very, very scary. With so many investment options, confusing tax rules and unpredictable markets, most people don't know where to start. So even if you are earning well, if you end up overpaying taxes or making random investments, you could be losing lakhs in potential savings without even realizing it. But that's where Liquid Black comes in to help you out. Their AI-powered wealth partner helps you optimize taxes, invest smarter, and protect your wealth from market volatility. With personalized profiling, they create a plan tailored to your needs by going through your assets, liabilities, and financial goals. Their precise portfolio assessment also ensures that your investments are continuously adjusted, making sure your money performs efficiently in any market condition. And with 75 plus years of expertise, they optimize your portfolio for long-term growth and tax-smart stability. And the best part is, it is very, very simple to use. They start with a quick consultation, followed by building a customized financial blueprint and executing a tax-efficient plan that evolves with your goals. So if you want to build wealth smartly, sign up for Liquid Black today and take full control of your finances. And you can get started from the link in the description. And now, on with the episode. To truly understand why Dubai's real estate market is making millionaires overnight, we need to break it down into 5 core fundamentals. These are the secret ingredients that make any real estate market boom or crash. Each of these pillars will determine whether your investment will skyrocket or crash into the ground. So let's start with the most exciting factor, which is called capital appreciation. And this number will tell you if you invest in Dubai, will your money double, triple, or completely disappear. Let's say you bought a $1 million property in Dubai, London, New York, and Mumbai. On average, this is how much your investment would grow annually. In London, your property will appreciate by 4%. In New York, it will appreciate by 6%. In Mumbai, it will appreciate by 4 to 5%. But in Dubai, it will appreciate by a staggering 5 to 8% per year. This means if you had bought a prime apartment in downtown Dubai for $1 million in 2015, today it would be worth $2 million. So your money will practically double without paying a single dollar in capital gains tax. Now let's compare this to London. You would have to pay 20% in capital gains tax. And the same goes for India, where we have a 20% tax on indexation benefits, and the US also has a 20% tax on these benefits. So in short, Dubai beats every major real estate market when it comes to capital appreciation. But hold on guys, that's just the first pillar, because the real game changer is in something called rental yields. Because here's where your passive income goldmine comes in. So if you bought an apartment in Dubai, London, New York, Bangalore, and Mumbai, the question is, how much money can you actually make by rent every single year? Well, let's break down the rental income for a $1 million property in different cities. In London, you will make $30,000 to $45,000 per year. In New York, you will make $40,000 to $55,000 per year. In Bangalore, it's between $25,000 to $35,000 per year. In Mumbai, it's $25,000 to $32,000 per year. But in Dubai, it's an astonishing $50,000 to $85,000 per year. And it doesn't stop there. While London and New York will charge you anywhere between 20 to 45% in tax, in Dubai, you keep 100% of your earnings because rental income tax in Dubai is 0%. This is the reason why investors are flooding into Dubai.
Dubai's property market is currently booming. Europeans are flocking to the Emirates, buying up luxurious properties,
luxury villas, infinity pools, private cinemas for the world's uber rich. And they are heading to Dubai to invest in a post-pandemic future.
Some of the investors include billionaires from Russia, crypto winners, and wealthy Indians and Asians looking for second homes.
But wait a second. Before you start throwing your money into Dubai's real estate, there is one major risk that could change everything. And this major risk asks a very scary question. What if Dubai's supply outpaces the demand? Could the market collapse overnight? Well, it can. So let's break it down. Here's the brutal truth, guys. Most real estate markets don't crash because of a bad economy. They crash when developers get very greedy, they build too many properties, and suddenly the market has more properties than anyone can buy. And this is where the nightmare begins and the market starts crashing. Suddenly, the supply floods the market, prices collapse, and investors lose millions of dollars overnight. This is exactly what happened in China, where they built entire ghost cities that no one lives in.
Over the past 2 years, dozens of Chinese real estate developers have fallen into financial distress.
China's real estate sector grew on the back of large loans. But now there's an oversupply. There are more homes than buyers.
It happened in the US during the housing crash of 2008, where an oversupply of homes led to a 29% price decline. And eventually, this crash turned out to be so bad that it took them another 5 to 6 years just to recover to the original cost pre-2008.
10 years ago this week was the signal event of the 2008 financial crisis.
It started in real estate, and it started with subprime, and that's the story everyone knows.
2008 housing crash when values all across the country fell 27%.
So the question is Dubai making the same mistake? Well, let's analyze the most critical indicators that tell us whether Dubai is a gold mine or a landmine. The first indicator is the population growth versus new residential units indicator. You see, the golden rule of real estate is very simple. If more people are moving in than there are houses available, prices rise. If developers build too many houses, prices collapse. Which is why it is important to measure the residents per unit built. Now, if this number is above 2, it means that demand is healthy. But if this number goes below 2, it indicates weaker demand. Now look at this. While Dubai's residence per unit is 2.72, in London it's 2.3, in New York it's 2.55, and in Mumbai it's 4.5 to 5. So what this means is Dubai's population boom is outpacing new housing, which means prices are rising sustainably. And if you look at Mumbai, this indicator says that there are too many people and very less housing available. This is the reason why the rental market in Mumbai is booming. So is it that simple? Well, we need to take one more level deeper. And this is where you need to look at the second factor, which is housing absorption rate. This is measured by the number of units sold divided by total units available into 100. This metric tells us how quickly new apartments are bought or rented in Dubai. And if you look at this variable, you will understand whether the apartments in Dubai are flying off the market or if they are sitting empty and going towards a potential crash. So if there are 100 units available and 80 are sold, the absorption rate is 80 divided by 100 into 100 equal to 80%. And here's how Dubai compares to other cities. While New York stands at 82%, Mumbai stands at 83%, but Dubai stands at 89%. And what's even more shocking is that luxury properties in Dubai have a 95% absorption rate, which means many homes are sold out even before they are built. But again, before you get too excited, let's talk about the biggest risk factor, which is affordability. For this, we need to look at something called price to income ratio, or PIR. This is measured by the median home price divided by median household income. Now, if this number is below 4, it's great and affordable for the locals. If it is between 4 to 6, it's somewhat affordable. If it is above 6, it means homes are expensive and only the upper class may be able to afford homes. And if it is anything above 10, it means that homes are only meant for high income earners. Now, if you look at this chart, the PIR for Dubai is 6.7, which means homes in Dubai are only meant for medium and high income earners. And if you compare it to New York and London, in New York it is 14.6 and in London it is 19.5, which means housing is extremely expensive. And you will be shocked to know that in Mumbai it is 30 plus, which means housing in Mumbai is completely unaffordable for the common man.
Mumbai is home to several millionaires and not surprisingly is one of India's most expensive markets when it comes to luxury real estate.
Having even a small house or some land in most parts of Mumbai would cost you crores.
This is the reason why most cities, including Mumbai, have a huge affordability crisis where locals simply can't afford to buy homes. So if the property prices grow faster than the incomes, it means that the market is overvalued and it could collapse anytime. This again says that Dubai is a jackpot. But here's the wildest part, guys. Dubai has a rental yield versus mortgage ratio that flips the game upside down and makes investors go absolutely crazy. The question is, why? Well, that is because in most cities, if you buy a house with a mortgage, your rental income barely covers your EMI. But in Dubai, your rent could completely pay off your loan, which means after your down payment, your house is practically free. Look at this. In Mumbai, London and New York, the EMI rates are higher than the rental yields, meaning most property investors lose money and they have to put in their own money to pay the complete EMI. But in Dubai, the rental yield exceeds mortgage rates, which means you can practically pay your EMI by the rent that you make out of your own property. This is one of the biggest reasons why Dubai's market is exploding. In fact, you can actually make a profit out of the rent after paying the EMI. But here's the catch, guys. You always have to remember that even the strongest real estate market has cracks, and Dubai has some serious dangers that most investors completely overlook. Now people, if you've stuck with me until this point in the video, you've been seeing some mind-blowing growth of Dubai's real estate market, right? But here's the biggest myth of all. Most people believe that only ultra-rich investors can make money in Dubai. Well, guess what? That's completely wrong. I did some digging and what I found is absolutely crazy. In fact, my research says that the less you invest, the more money you make. The question is, how on earth is that possible? Well, let's break it down. Dubai's real estate market isn't a single market, guys. It's divided into 5 distinct categories based on price, location, and returns. And surprisingly, the numbers will tell you that it's not the ultra luxury segment that makes the most amount of money. Look at this. First up, we have the ultra luxury category, which is the playground of the billionaires and the ultra high net worth individuals. You can find these properties in areas like Palm Jumeirah, Emirates Hills, and downtown Dubai. These properties start at a price tag of $2 million and they could go into hundreds of millions of dollars. And the beauty with these ultra luxury properties is that some of these properties have also appreciated by almost 147%. But the catch over here is that their rental income is the lowest at 5 to 7%. That's the lowest in Dubai. So the question is, why do people buy them? Well, these are not properties bought by people like you and me, guys. These are properties bought by billionaires, and they don't buy it for rental income. They buy these properties for flex. So if you're looking for a passive income, this is not your game. So let's move on. Next up, we have the high-end luxury market where properties sell anywhere between $800,000 to $2.7 million. This is where high-income investors step in. But unlike ultra luxury, rental yields over here are higher at around 6 to 8%. So this is the middle ground between ultra luxury and high yield cash flow investments. Then we move to mid-range properties, which is the range between $300,000 to $800,000. Now this is where things get interesting. If you want the best balance of growth and rental returns, mid-range properties are where you should be looking. These properties are located in JVC, Dubai Hills, Town Square, and Dubai Creek Harbour. And these are some of the fastest growing areas in Dubai. So if you want strong capital appreciation and high rental cash flow, this is the safest bet you can take in the market of Dubai. Then we have affordable housing, which fall below $270,000. And these affordable housing units are found in International City, Dubai South, and Dubai Line. And these areas make up one of the easiest ways to enter the market. But here's what makes them absolutely crazy. Their rental yields go up to 8 to 9%, guys. So if your goal is steady passive income, this is where you must play. And lastly, you have the worker and low income housing. And surprisingly, here's where you have the highest rental yields in Dubai. So if you want pure rental income, worker and low income housing in Jebel Ali and Al Quoz can generate over 10% rental yield. That's almost the highest rental yield you can find in Dubai. Why? Because these properties are always in high demand due to worker inflow and these units are never empty. But here's the disclaimer, guys. This segment isn't meant for everyone. Managing worker housing comes with a lot of challenges and the appreciation is also lower. But if you want guaranteed rental cash flow, this segment is where the gold is. So long story short, if you are looking for capital appreciation, stick to ultra luxury or high-end properties. If you want cash flow, mid-range and affordable housing offer the best ROI. And most importantly, always remember, if you're a first-time investor, you don't need millions of dollars. You just need the right strategy. So by now, you've seen the jaw-dropping numbers, right? Dubai's real estate market is skyrocketing, rental yields are outrageous, and there is literally no tax on your profits at all. So this sounds like a once-in-a-lifetime opportunity, right? Well, this is what the real estate agents of Dubai will tell you. But here's the truth, guys. Nothing, I repeat, nothing in real estate comes without risk. And Dubai has some serious pitfalls that could turn your dream investment into a financial nightmare. So pay very, very close attention to this. Let's break down the biggest hidden dangers of investing in Dubai. Firstly, you have the loan and payment roadblock. Did you know that unlike in India or the US, where you can easily get a home loan, Dubai has a strict foreign investment rule. So if you're an Indian investor looking to buy a 3.7 crore apartment in downtown Dubai, guess what? You can't get a mortgage. Why? Because under India's Foreign Exchange Management Act, Indians cannot take out a home loan for a Dubai property. So either you have to pay the full amount upfront, or as a foreigner, you might need to get a loan from a UAE bank itself. And you have to lock up a huge chunk of your savings in just one property. And even if you somehow arrange a private loan, there's another massive risk. Dubai's property market is tied to the US economy. So while Dubai may look like an independent economic giant, in reality, its economy is closely tied to the US because dirham is after all pegged to the US dollar. And if you remember, in 2008, when the US housing market collapsed, Dubai's real estate market also crashed by 50% in a single year. And it took another 4 years for the market to recover. And the reason why this point is more important today is because the United States is facing record high debt, rising interest rates, and even a possible recession.
America is sitting on a giant mountain of debt. If it erupts, the consequences would be disastrous.
The Fed chief acknowledged that the economy has slowed down in some areas.
It is right now the one thing that is signaling sort of a red light in terms of recession.
So if the US economy slows down, the global investors will pull their money out of the higher risk markets like Dubai, and it could lead to falling property prices and shrinking rental yields. And this is exactly what happened in 2008 and 2009.
At the time, developments ground to a halt and property prices began to collapse as much as 60%. Leadership of neighboring Abu Dhabi, the UAE's capital, announced a $10 billion rescue package for struggling Dubai.
So while Dubai's real estate is booming right now, history shows that it is not crash-proof. And if the US economy sneezes, Dubai might catch a serious cold. If this is clear to you, let's move on to the next problem, which is the problem of tax. Now, if you talk to any real estate agent in Dubai, they all will tell you the same thing. Brother, Dubai has zero tax. And here's what they won't tell you. If you're an Indian investor, you still have to pay tax on your Dubai property in India. So any rent you earn in Dubai must be declared in India, and it is taxed at your income slab anywhere between 5 to 30%. And if you sell your Dubai apartment for a profit, India's capital gains tax applies for your Dubai property just like any other foreign asset. And if you don't report your Dubai real estate income, you could face some serious problem. So while Dubai itself won't tax you, your home country still will tax you. And if you don't handle the paperwork right, you could end up in some serious legal trouble. This is the reason why, guys, you need to understand that a bad investment in Dubai is just as dangerous as a bad investment anywhere else. And lastly, you have to be careful with the bubble trap. You see, Dubai looks like it's on an unstoppable winning streak. But always understand, every real estate market, I repeat, every real estate market eventually corrects. So the $1 million question is, will Dubai crash again like in 2008 and 9? Well, here's what you need to know. The rental demand is strong and absorption rates are still high. Number 2, the government has put new regulations to prevent oversupply, so that's a good thing. Number 3, foreign investment is flooding in, especially from the Russians, Europeans, and the Indian expats. But the red flags say that if the US enters a recession, investor confidence could collapse. Number 3, ties to the US economy could crash the Dubai's market in no time. And last and most obviously, choosing the wrong location anywhere, let alone Dubai, is practically a disaster. So while Dubai's real estate market looks unstoppable today, always remember, no market is crash proof. So after studying all these parameters, if you fully understand the risks, choose the right location, and if you have the capital to invest wisely, Dubai can be an absolute goldmine for you. But if you're not careful, this same goldmine could turn into a financial trap. This is what my study says about the real estate market in Dubai. Now you tell me in the comments, what did you learn extra about the Dubai real estate market? And if you've ever spoken to a real estate agent in Dubai, what did he tell you and what did he hide from you? Let me know in the comments. That's all from my side for today, guys. If you learned something valuable, please make sure to hit the like button in order to make YouTube happy. And for more such insightful business and political case studies, please subscribe to our channel. Thank you so much for watching. I will see you in the next one. Bye-bye.